Hey everyone, welcome back to Zaki Crypto Update. It's great to have you here, especially as we dive deep into what could be a pivotal moment for Cardano. Today, we're going to analyze Cardano's recent price movements, explore the risks it's currently facing, and discuss the potential impact of the latest Hydra update. Could Cardano be at serious risk of losing its critical $0.30 support level? Or will the bulls manage to rally behind the recent developments and push the price higher? Let's break it all down. Before we jump in though, I want to remind you that this video is for educational and informational purposes only. It's not financial advice. Always do your own research and consult with a financial advisor before making any investment decisions. The cryptocurrency market can be extremely volatile, and it's important to understand the risks involved. Let's start by looking at the bigger picture. Over the past 2 weeks, Cardano has experienced a significant price decline, dropping by a staggering 31.5%. This kind of movement has undoubtedly caught the attention of traders and investors alike, as AD has been struggling to find solid ground. During this period, Cardano has formed what technical analysts refer to as an expanding channel pattern. This pattern can often signal investor indecision and volatility, which isn't exactly what you want to see if you're hoping for a strong upward move. As of this weekend, Cardano's price was holding steady at around $0.34, marking a slight decline of 0.37% in a relatively calm market. Interestingly, while Bitcoin has managed to maintain its position above the $60,000 mark, many of the major altcoins, including Cardano, have been in consolidation mode. This stagnation comes after a midweek rally that didn't seem to have the staying power to keep the momentum going. So the big question on everyone's mind is, where does Cardano go from here? Is this a temporary dip, or are we looking at the start of a deeper correction? Now let's shift our focus to one of the most significant developments in the Cardano ecosystem, the Hydra update. For those who might not be familiar, Hydra is a key component of Cardano's Layer 2 scaling solution, designed to enhance the network's transaction processing capabilities. Sebastian Nagel, a core developer for Cardano, recently announced the release of Hydra version 0.18.0, and this update is packed with new features and improvements that could potentially influence Cardano's future price movements. So what's new with this update? One of the standout features is the ability to withdraw funds from a running head without needing to close it. This enhancement significantly boosts the protocol's flexibility, making it more efficient and user-friendly. But that's not all. There have also been various documentation improvements, fixes for internal wallet fee calculations, and preparations for the upcoming Conway upgrade. Sebastian Nagel also teased some ongoing work on incremental commits and hinted at an exciting, potentially challenging demo that will be showcased at the Rare Evo event. This suggests that there's more innovation on the horizon, which could be a positive catalyst for Cardano's future. However, here's the thing: despite these promising updates, the Cardano price hasn't shown any significant upward movement. Instead, the price has been moving sideways, hovering just above $0.34. This lack of immediate market reaction raises some important questions about whether the Hydra update will be enough to spark a sustained rally, or if the downtrend will persist. Could it be that investors are waiting for more substantial developments, or is the bearish sentiment simply too strong to overcome at this point? Let's dive into the technicals, which offer some valuable insights into what might happen next. Earlier this week, ADA managed to bounce from $0.275 to $0.346, recording a 25% gain. This rally was largely driven by broader market recovery and the positive sentiment surrounding the Chain hard fork and Hydra update. At first glance, this might seem like a bullish signal, but a closer look at the charts tells a different story. The recent price action has contributed to the formation of an expanding channel pattern on the daily chart. For those of you who aren't familiar, this pattern is characterized by two diverging trend lines. It's often seen as a sign of investor uncertainty, and it can lead to a prolonged period of sideways or downward price movement. In other words, this pattern suggests that the market is struggling to find direction, which could make it difficult for ADA to sustain any upward momentum. Adding to the bearish sentiment is the alignment of the daily exponential moving averages EMAs. The 20, 50, 100, and 200-day EMAs are all pointing downward, which suggests that the path of least resistance for ADA is to the downside. This bearish alignment is a strong indication that the recent rally might have been a temporary blip in what could be a longer-term downtrend. If market participants continue to be concerned about a potential correction, we could see Cardano's price drop further from the $0.34 level, which is currently being guarded by the 20-day EMA. Should this level fail to hold, the price could plunge by another 18%, seeking support around the $0.28 mark. This would be a significant drop, and it could shake the confidence of even the most die-hard ADS supporters. On the flip side, if the bulls manage to break through the 20 EMA, it could signal the first step in reclaiming lost ground. But make no mistake, the road ahead is likely to be a challenging one. Breaking through this level would require a significant increase in buying pressure, and it's unclear whether the current market conditions are conducive to such a move. Despite the bearish technical indicators, there is a silver lining, at least for the bulls. The Relative Strength Index RSI, which measures the speed and change of price movements, has rebounded from the oversold territory. It's now sitting at around 40%, which suggests that there is strong demand for ADA at these lower price levels. This demand could potentially fuel a short-term rally, pushing the Cardano price up by as much as 22%, with a target of $0.423. However, it's important to note that this potential rally would likely face significant resistance from the upper trend line of the expanding channel pattern. This means that even if ADA does manage to move higher in the short term, it could encounter strong selling pressure as it approaches the $0.423 level. Breaking through this resistance would be a major victory for the bulls, but it's going to require a lot of momentum. Another factor to consider is the broader market context. As we've seen, Bitcoin's performance often has a significant impact on the rest of the cryptocurrency market. If Bitcoin can sustain its position above $60,000 or even move higher, it could provide the necessary support for altcoins like ADA to recover. However, if Bitcoin starts to lose ground, it could drag the entire market down with it, including Cardano. So where does this leave us? Cardano is clearly at a crossroads. The Hydra update, while promising, hasn't yet translated into a significant price rally. Instead, the price action suggests that the market is still wary, with many investors possibly waiting on the sidelines to see how things play out. The expanding channel pattern combined with the bearish alignment of the EMAs indicates that the risk of further downside is real. On the other hand, the rebound in RSI offers a glimmer of hope that the bulls could stage a comeback. The key question is whether they can muster enough strength to break through the $0.34 level and push towards $0.423. It's also worth considering that we're in a market that's still highly influenced by macroeconomic factors, regulatory developments, and overall sentiment in the crypto space. As always, the cryptocurrency market is highly unpredictable, and what seems like a sure thing today could change tomorrow. In conclusion, Cardano's price is at a critical juncture. The Hydra update brings new features and improvements, but the market's reaction has been muted so far. Technical analysis points to a potential bearish reversal, with the price at risk of dropping to $0.28 if the $0.34 support fails. However, the RSI suggests that there could be enough demand to fuel a short-term rally. As always, it's important to stay informed and keep a close eye on the charts. Whether you're a long-term holder or a short-term trader, understanding the technical and fundamental factors at play is crucial to making informed decisions. Remember, this video is not financial advice. It's meant to provide you with information and insights that can help you navigate the complex world of cryptocurrency. Always do your own research and consider seeking advice from a financial advisor if you're unsure about your investment decisions. If you enjoyed this deep dive into Cardano's price action, don't forget to smash that like button, hit subscribe, and ring that notification bell so you never miss an update. And let me know in the comments, do you think Cardano will hold its ground?